Hey everyone, we're back at FIA BOCA. It's Wednesday. I'm joined now by Alex Knight, who's head of sales and EMEA at Baton Systems. Alex, welcome to our interview, and thanks for joining us.
My pleasure. Thank you for having me.
So, Alex, there's a lot of things going on in the markets today, but I wanted to talk about a few specific things that I think you have some great insights on. I wanted to talk about settlement fails. They seem to be at the top of the agenda as derivatives and FX trades, which are larger markets by average ADV. They've seen an increase in trade fails as a result of recent market volatility. What infrastructure changes do you think must take place to reduce the risk of these failed settlements?
Yeah, so I think it's interesting that there has been an increase in the number of fails, certainly anecdotally. I mean, when I speak to heads of operations at large banks, they are expressing to me their concern about the number of fails they're having, about the cost of the fails they're having, partly due to market volatility. So I think if you think about what needs to change in order to reduce the cost and the number of those fails, we really need to think about a post-trade process that is better coordinated, that is more transparent, that is more automated, in order to allow for a scalable process that, whilst it doesn't need to be one size fits all, is configurable from an automated process, an automated perspective. So it's this sort of combination of configurability and automation around some of those really key elements in the post-trade process. So there we're thinking about matching, which is relatively straightforward.
Okay.
But we're also thinking then about netting, where different parties want to net in different ways. We're thinking then about the process of pre-affirmation after netting, which is really a very, very bespoke process from counterparty to counterparty, and then the actual settlement process itself. And frankly, what firms need to put in place are systems and processes that allow for that automation with configuration of those key processes. And I think another important thing is processes and systems that allow for the identification of fails and breaks much earlier in the life cycle of a transaction. So rather than realizing on value date just before cutoff that you don't have an SSI in place, identify that much further up the chain. And I think those are sort of some of the key elements that people should be looking at.
And it seems to me, it's been a few days of the conference so far. We've heard from market participants, certainly from the FIA, they seem to be taking a proactive approach at looking at these sort of issues as well. So hopefully there will be some sort of industry consensus down the road to kind of alleviate these failed settlements, because I feel like as we move further down the road this year, but even looking at the things that are happening on a daily basis, the demand for trading and the demand for settling trades is just basically exponentially increasing every day, especially in the market conditions we have today.
And I think if you think about, under the purview of the FIA, if you think about the cleared collateral or collateral for cleared derivatives, and we think about the movement of cash and of securities, particularly in the volatile markets that we're seeing right now, we're seeing very large notionals and very large numbers of movements, processes that are operationally intensive, that are fractured, and I think being able to bring together, again, those processes under a sort of common architecture, so whilst retaining the individual processes, finding a common entry and exit point into and out of those individual processes, I think is really key.
Yeah, absolutely. And I wanted to talk, you mentioned collateral. I wanted to talk about, in the face of rising interest rates, well, they've already risen, right? Elevated interest rates. Posting collateral in the form of securities is becoming an ever more popular option, better than, well, arguably more attractive than cash. What is the role of data to achieve proper collateral management, do you think? Because that's a whole separate issue.
So absolutely. So look, at Baton, our focus always ends up with the orchestration, the acceleration of the movement of the underlying asset. That's our end point. But to get there, you've got to start with good data.
Right.
Yeah. And so where we spend a lot of our time is on integration into key elements of the financial markets infrastructure, the CCPs, the custodians, for example, the CSDs, integrating into those such that our customers can see on an intraday as well as end-of-day basis. They can see their sources and their uses of collateral. And they're able then to make better decisions.
Of course.
Yeah, because if they've got normalized aggregated data, they can start to run rules against that normalized aggregated data. Particularly then, the other element of data that we work with is eligibility data.
Okay.
So if you have that intersection of your sources and uses of collateral, plus you have that information around the eligibility, you can then start to run an optimization process that is really sort of thoughtful and helpful. So that data element is important. Just by the way, the other area where we see interest is, number one, providing the data so that the decisions can be better, but it's all very well being able to take great decisions. But if you can't implement those decisions, you've wasted your time a little bit, so the other piece is that connectivity to be able to actually make those movements happen and to have transparency over the movements themselves.
And is that something that market participants can approach Baton systems
absolutely.
in terms of inquiring about?
Absolutely. So those integrations that we've built with the CCPs, for example, I think we've now got integrations with CCPs that represent more than 90% of the collateral posted in the cleared derivative space. So those integrations are two-way integrations. Number one, we're consuming real-time data from the CCPs, but number two, we're allowing our customers to send pledge and record instructions to those CCPs in a consolidated way. So a portfolio of instructions to a portfolio of CCPs in one move.
That sounds pretty great. I wanted to talk about collateralization, right? There's increasing collateralization requirements, right? Both from from the regulatory side, and there's a need for increased robust risk management protocols. In my mind, I guess I wanted to ask you, I would expect more gaps and shortfalls as these requirements go stack one on top of each other. I wanted to kind of get your impression of what we should expect.
So more gaps or that's interesting, isn't it? So yes, there may be more gaps or shortfalls. I guess again this comes back in part to the data. So the natural response from firms might be to put in place a very large buffer in order to avoid a gap or a shortfall, which would be operationally satisfactory. From a financial perspective, would be suboptimal. So again, I think this comes back to sort of the nuance between being able to see what your requirements are, to anticipate what your requirements might be, and to position collateral quickly and effectively, rather than simply placing large set and forget buffers. And frankly, even a large buffer may not be enough because the market will move and you've still got to react quickly. So a lot of this is about the ability to move those assets quickly, to know whether they've been received, whether they'll be accepted by the CCP, for example, to know what the status is in real time. Have they been accepted by the CCP? Are they reflected now in the balance? Has my ops team managed to take the instruction and actually make the move? And so providing that transparency over the actual status of the move is a really, really key element, I think, of what people need.
Great, awesome. So we're all obviously aware of the collapse of several big names in the crypto space recently, including FTX. This kind of has resulted in a lot more regulatory scrutiny of the crypto markets, and also ultimately, it led to a big blow in terms of confidence and trust from the retail and institutional side of the financial markets. We've also heard the term crypto winter and things like that. What's your personal opinion on crypto going forward? I speak to a lot of people and I ask them the same question. Do you think there's an opportunity to rebuild trust in these markets? And do you think that it's actually not a crypto winter, or we're past the crypto winter and now we're in a crypto spring and summer, where it might actually be a good opportunity right now to, behind the scenes, improve your offering, right? make changes.
Yeah.
If we're talking about like crypto on an institutional level, and then come to market, when you feel it's the right time. I personally feel like right now is not the right time to go to market because there's regulatory scrutiny, but there's a lot of unknowns, right? Because there's no new sort of clarity coming down from the regulators. And on the trust side, yes, we need time to rebuild that trust.
Yeah. So I don't have a particularly strong view on whether now is the right time to be investing in crypto or not. But I think one thing I'd like to offer here is to sort of break the question down a little bit. Because I think sometimes it's important that, or maybe I'll put it a different way. Sometimes people conflate crypto with blockchain, with DLT, with fintech, and everything gets sort of put under the same umbrella, and that I think can be misleading. So I think the first thing, there are good actors and bad actors in every industry. Yeah,
sure.
And yes, the less well-regulated industries are more prone to have bad actors, but there have been examples of bad actors in very well-regulated industries. Sort of put that to one side a little bit. Sort of make that point. Yeah. The other point I think is that from the perspective of the underlying asset that is being invested in. Clearly the less well-regulated assets that are less clearly supported by actual underlying value are riskier investments, and I think that's clearly coming through in the market right now.
Yeah.
Take a step back beyond that, and you start to strip it out and look just at the technology that's being used for the delivery. And I think this is where I have a sort of very strong view. Yeah. The technology that's being used for the delivery is an enabler. Yeah? Blockchain is an enabler. I think we've probably established that blockchain has a pretty limited use case in established financial markets.
Yes.
Yeah? I think it has more use cases in developing financial markets where you're creating an infrastructure or a process from scratch.
Correct.
But for an established market, it's got limited use. But where we sort of feel we've got a strong value proposition is through the use of distributed ledger technology. Not blockchain, not Bitcoin, distributed ledger technology in order to facilitate workflows that can be shared by, in our case, regulated institutions. That I feel is a highly investable proposition.
And do you think that Baton Systems will continue to invest in the sense that from a fintech perspective and your DLT technology,
Absolutely.
You will continue to sort of pioneer that going forward
So
this year?
So our entire tech stack is based around distributed ledger technology, our own build technology, distributed ledger technology, with, and I think this is really important, the ability to interoperate with really established parts of the financial markets infrastructure. That interoperability is really key. So yes, absolutely, we'll carry on investing in that vein.
And I guess the last question is also on the technical side of crypto. Are you? Did you see sort of like a drop or sort of like a what's the word? Sort of softening of interest or demand for market participants in your DLT services as it relates to crypto?
So our services really are not that related to crypto.
Well, I'm sorry, specific to the distributed ledger technology.
No, absolutely not.
Yep.
No, I think we have a job to do, which is to explain the difference that I just tried to articulate just now. But no, I think by and large, people that are deep in the industry are very comfortable. In fact, very encouraging about the use of distributed ledger technology for the purposes that we apply it.
Awesome, great. Well, Alex, thanks for taking the time to speak with us and sharing your insights, and all the best to you and to Baton Systems going forward. Thanks.
That's great. Thank you so much. Thank you.